Good morning, ladies and gentlemen. I'm recording this short video to give you a taste of how my normal day looks like when I wake up at 3. I'll go ahead and share my screen and explain the steps that I usually follow. One, I usually come to Forex Factory and check the economical calendar. If there's any high impact news, the one with red folders, these are high impact news. Like at 10:30 a.m., we had a very high impact news on euro, and 11:30 a.m. GBP, very high impact news. And for the dollar, it's around 4:45 p.m. We have very high impact news. So before you trade the financial market, you're supposed to come and check the financial calendar for you to have a rough idea of what is happening in the market. So I wanted to trade around 3 a.m. So there's no high impact news on dollar. So that's a tick. And then I'll come to market sentiment. Market sentiment usually measure how the retail traders that have taken their position, like if the shorts are more than long and all that, the data combined, and this is real time information, the real accounts. So if you can check for the dollar, short position is around 73%, and long position is 27%. So when you see there are more short position than long position, as a good trader, go against most of the retailers because the market movers are big institutions and big banks. And for them, they'll always try and find where liquidity is for them to sweep liquidity and then to continue with overall movement of the market. So, as a good trader, when I look at this, I know I'm going to look for buys. So it gives me a confidence of my direction of the market. So the third software I'll check is called Order Book. This clearly shows you the orders in real time, and it has a scale, and it tell you where the traders have placed their orders. Like for now, when I'm doing this video, most traders have placed their sales limit at 37.59. That's a very big number that have placed their sales. And that's the reason why when you go to sentiment, there are so many people on sales than long. So when you're doing your analysis, get it in mind that when the market reaches 37.59, it might reverse. But sometimes there's some traders, they usually do something called spoofing. They place their orders, and then as soon as the market reaches that point, they remove their orders. So you must be very, very careful about that. But generally, that's how you be because um, fuel for the market it's orders. So when there's a lot of orders at 37.59, the market will tend to move to that direction because there are a lot of orders up there. So basically, this will tell me the market will move from 37, will move to 37.59. So it's clearly showing me the market is moving up. So after that, I'll go to my trade view to do my normal analysis. So I'll use a replay tool from TradeView. So if you check, this is 3:30 a.m. So I'll start replaying the, the forward button. Nice one. So at this point, this is the lowest the market was at this particular point. So I know this is my support level. And I told you about my support concept. The last previous low, it's my support. So this is my approach in this market. This is my support. That's my support in this market. So I'm waiting for a candlestick confirmation for me to be able to go long. So I'll continue playing. Nice one. That is a bullish engulfing. But these are too long bullish candlestick. So I'll wait for the market to retrace a bit before I enter this market. So for you to manage very well in financial market, you need to be very, very patient. Nice one. So I waited for this candlestick to close to show some resistance at this particular area. So I decided, right, let me enter my buys from this point. So generally my stop loss will be 60 pips, and then I'll target uh, first TP and second TP. I'll target 1 to 2. Then I'll scale up to 1 to 3. So from this point, this was my setup. I sent it to the group, and then I waited for the market to play. Mind you, I woke up at 3, and then imagine from 3, I'm taking my trade at 4:15. So you really need to be patient when it comes to trading. So I played the market. TP1 was hit. Everyone knows that who is in the group. And then the market started reversing. This is a clear indication. If the market is not able to break the previous high, it's a clear indication that we are almost reversing. But I wasn't in the market at this particular time. I usually put my stop loss, take profit and all that, and then I go back to rest. If I was in the market, I could have seen this reversal, but that's okay. So it spiked down, removed us on this trade. So our stop loss was hit, but we already banked in around 64 pips. So I usually put an alarm. So my alarm was around this point. So I came to the market, checked, had been stopped out. So I knew this market is in a bullish momentum. So I tried to look for another confluence in this market. So I saw something which is head and shoulder, very powerful, powerful uh, candlestick pattern. So from this point, I saw a shoulder at this point. Head and shoulder, head and shoulder. This is how it looks like. This is a shoulder, inverted head and shoulder. And then this is head, and then this and the shoulder. So the market was supposed to come to the shoulder, then it push high. Basically, that's how I viewed this market after I was stopped out. So I was waiting for a candlestick confirmation from this point for me to re-enter this buy. But I knew most of you guys are asleep, so I didn't send that setup in the group. So I was waiting for because this setup was disrespected with the market. So I was waiting for confirmation from this point. So let me replay. Not yet. So I decided to enter my long position from this point. These are doji candlestick. That's a candlestick confirmation. So I'll target my stop loss is standard, huh? Always 60 pips. So from this trade, I just wanted to target this high. That high. Because I knew the market is going to reverse at this point because of double top. Yeah, we will discuss about that. So I entered this position from inverted head and shoulder pattern, candlestick pattern. So let me play. It was a long week, but it didn't stock me out. If you get a good broker, that spike can take you out. It didn't take me out. But if you don't have a good account, you just wait for a bullish engulfing like this one. You enter from this point. So let's replay. That's why I caught my 150 pips move on this market. I made around $500 from this trade. So that's how I approach the market. With a lot of patience, with a lot of precision in the market, you will make a lot of money. I hope you have learned something, and thank you very much.